Felix here, and welcome to this pre-market live stream from Kuala Lumpur. And we just got out inflation data, and it's not what you want it to be, honestly. So I want to walk you through what's the actual data and how's that hitting stocks in your portfolio. How big is the impact going to be as the data is only half an hour old? And how do we avoid, therefore, stocks that are falling? There will be some stocks that are going to fall quite significantly from this. And then I also want to walk you through what Wall Street's expecting the stock market to do for the rest of February. Then we're going to do a massive Q&A. We're going to look at all of our favorite stocks, the Palantirs, the Teslas, the Nvidias, the SoFis, the PayPals, the Quantums, the whatnot. I'll share my screen with you. And there we go. See, there we go. Inflation. How big's the impact? How to avoid falling stocks? Market expectations. Who wants to know what we got going on here? Let me know in the chat. Say, I am. And I'll know that you're actually a real person, you're alive, and you know, just about recovering from the madness that's about to hit us here. So, grand rising indeed. Big market downturn incoming. There is a silver lining here. There is a positive, optimistic scenario here. I also want to walk you through that, but let's walk through the real data points here first. And thanks for everyone letting me know that you are alive and a human being. We're going to have to do more of those checks, right? As viewers in the future will just be AI bots summarizing my videos. I think that's going to come. You have 3,000 viewers and 2,999 of them are AI bots. Looking deeper today, says Terry. Okay, brilliant. I'm not a real person, says the swing trader. I always suspected that, my friend. So here we go. Core inflation data just out, freshly baked off the press. Why is it bad? What are we seeing here? Well, you're seeing it came in at 0.4%. Expectation, this here was the expectation, and that's at 0.3%. So that in itself is therefore bad. Why is it bad? Because higher inflation means what? Well, the Fed isn't going to cut interest rates. Because if inflation is higher, they basically need rates to stay higher to calm the economy down, and therefore inflation will dissipate. The fact that inflation was entirely caused by the Fed printing $4 trillion is something that we swept under the rug. That never happened, apparently, but I still remember. The headline inflation rate came in at 0.5%, which is rather ugly because we were expecting 0.3. Last month it was 0.4. So that's a pretty significant spike. We did expect it to be a little higher, but it's coming in, well, a little higher than a little higher, if you know what I mean. So not brilliant. And now the inflation rate, the annual inflation rate is back at 3%, no longer at 2 point something, which is psychologically quite a big difference here. David, you're real as well. Brilliant. Have you had any dosa or tandoori today? No, today was actually a day with no Indian food, which is a first this week, I think. So let me show you in charts, because that kind of shows you a little bit more like what's actually going on here and how big a deal this is. So during COVID, after the idiotic money printing that took place, inflation went up to sort of 8–9%. Right? It's then come down to about 3%, dropped a little bit here into the low 2s, and now we're picking up steam again here, which isn't brilliant. Definitely not brilliant. But it's also not massive. It's not a huge increase, but it is something that's a bit of a blip on the radar here. And this is core inflation, and that's kind of more important. The Fed tends to look more at core inflation than at headline inflation, because that sort of fluctuates. And then what do you see? Well, it's picking up, but it's also where we were 2 months ago. So it's not exactly the end of the world, but it also isn't, you know, brillante. So stocks are going to get hit. How much? This was Goldman Sachs' wisdom. They said if inflation comes in at core, that is. What did core come in at? What did I just say? Core came in at 0.4. Core comes in at 0.4, the smart investment bankers said, after they did a little bit of this. They said that the S&P will drop 1%. 1 percentage point. Shall we see how much it's dropped by? Let's have a look. Let's have a look. Where is my clever little window gone here? Let's have a look at SPY here this morning. And yeah, we're down about 0.9%. So far they're kind of spot on. Is that a huge move? We're below 6,000. That isn't good. The market gets choppier below 6,000. So what I would also expect to see is for the VIX, the fear index, which measures sort of how much the market is expected to move by, to jump quite a lot today. So it's up 5 percentage points here, back to 17. I'd quite like it to go to 20. A lot of money if it goes to 20. And those of you guys who read my emails where I explained to you that VIX trade 2 days ago will understand a little bit more about that. And that's definitely a good one here. Okay, so let's have a look at the heat map. And the only thing in green is Tesla. Well, it sold off pretty uglily yesterday. That might explain why. What's the other thing that's up there? What's that? Intel. Intel is up 5%. I have no idea why. We shall find out in a moment. And that's pretty much it. I mean, pretty much everything else is not looking very, very happy today, which could be an opportunity. Could always be an opportunity. Tesla, the only one holding up. Big tech stocks are down about a percentage point, which isn't sort of crash territory, by the way, right? When they go down 3% in a day or something, that's when we buckle up. A 1% early market. There is something that's going to kick in as people now unwind their hedges they set up yesterday. And when they unwind those, it actually tends to push the market up a little bit. So I think it might recover a little bit. That would be my expectation. But we can definitely see what happens there. So what's the real problem here? The real problem is this, that the, where is it? The fund futures, where are they? Fed fund futures, I haven't got that chart open right now. Basically, the market at this point is not expecting a rate cut until December. It was like July till yesterday. So that's kind of where we are at. Now, does the market overreact? Yeah, that's what the market does. If you hadn't noticed, it tends to always overreact. Now, Fox is reminding us to watch the masterclass. Before we do that, and we should definitely do that because it'll actually help you. A lot of your questions today in your mind are, what's going on in your mind right now? Is it like, should I exit that position? Should I close it? Or should I buy some more of it? What will be the smarter thing to do right now? That's probably what you're thinking, right? You're feeling a little bit antsy, a little bit stressed today, right? If you're honest with yourself. Most people are going to feel a little bit stressed today. And that makes you human, by the way. You want the solution for that, go watch the masterclass. Seriously, leave the stream right now and watch the masterclass, because it'll for 15 minutes teach you when do professional traders and investors enter a trade, when do they exit. And those are really the two key questions that you need to know. And if you don't, stuff like that happens. These are the biggest S&P underperformers of the last year. Nike is down 34%, Estee Lauder 54%, Walgreens 54%, Moderna down 62%, Albemarle, remember everyone was like, that'll make us billionaires, at 33% down. Adobe is down 31%, AMD, Advanced Money Destroyer, 37% down, Intel down 55%, even though it's popping a little bit today. So how do you avoid these? Just by having rules. It's really, really, really very simple. We'll definitely look at SoFi as well. Alpha, you watched the masterclass yesterday. It was 18 minutes long. You mean I'm mis-selling because I'm saying it's 15? Oh. I don't think that was the problem, my friend. I think the problem was there's a little bit more mindset there, right? So go and do what Alpha did yesterday. Go watch the masterclass, my friend. And someone's asking, should I buy the Tesla dip? This will also answer that for you. Didn't receive the VIX paper, Albie. Check your email, check your spam, and if you still haven't received it, drop me an email and we send you the link again. We did send it out to about 65,000 people. So a lot of people got that. Now, before we look at SoFi and Palantir and Tesla and Nvidia and PayPal and see the pain over there, this is the CNN Greed and Fear Index, right? This is greed and fear. And what do you see? It's at neutral. Does that feel like a market crash when it's at neutral? This is not a market crash. This is a wobble. This is what a wobble looks like. Say wobble for 3 times in a row very, very quickly with a straight face. And I'm not too worried about this, which is usually what people say when they're about to jump off a cliff. But in all seriousness, look at this. This is the seasonality. And I showed you this in January. I showed you this in early February. I'm showing it to you again. The NASDAQ seasonality does this. Do you remember if you watched me in early Jan and I said, we expect the market to perform very well until mid-Feb, which is there. And after that, we tend to see it sell off. Why does it sell off? In January and February, we get the biggest inflows from retail, from 5 to 9, from the all your pension accounts and so on. And then mid-February till March, we tend to have this wobble. The seasonal thing. It happens every year. Well, not every year, but it happens. This is certainly the last 20 years. It happened, and then from March onwards, we tend to do very well again. So we're getting into this wobble period. But what's really driving this? What's the concern here? Well, there are quite a lot of concerns right now. I think Trump came into office. Wall Street was very excited about that because he's a very billionaire kind of a president. And they thought, well, he's going to fix everything in week 1. He's going to give us tax cuts. He's going to do all the deregulation. He's going to solve all the problems in the world in week 1, and then we'll live happily forever after. Of course, it doesn't work that way. So the sort of honeymoon period is over, and now you're thinking, okay, he's putting in all these tariffs, and that could cause inflation, at least for the short term. It's going to cause all this uncertainty about trade flows, and, there is the war in Ukraine, in the Middle East, and we don't know what he's going to do there. Is he going to set off a bigger war in the Middle East? I mean, oil prices would go up, which is, again, inflationary. The Fed yesterday, Fed Chair Powell said, we have no urgency to cut rates. We're just going to sit here and wait, which is not what the market wanted to hear, but is quite frankly what we all expected him to say. So I'm not sure why that was such a big impact. And then you've got, say, big stocks like Tesla, right? And you're seeing their car sales actually declining in Europe and potentially in China and then in the US. And you got this promise and premise of, AI will save us all, but we're not quite there yet. Now, robo-taxis are apparently going to be on the road in Texas in June or July, which is pretty freaking close. So it's an odd time to sell off. But the market is like that. The market wants results now, not in 6 months. So you're getting a little bit of this kind of this fear going through there. And quite frankly, a glorious opportunity, but it needs to be managed. And that's why I'm saying to you, see the link down below, felixprehn.org/get free, and learn how to manage that. Because when the pre-market looks like this, you're going to start feeling a little bit itchy and scratchy, right? And there are ways to manage that, but you need to understand how. And, one, for example, is set up the VIX trade. When we did, I don't know, we were in the 15s or something, you'd be up quite nicely by now. But you can't do that now. Now is too late, but you can still learn now. Now is the impetus, the motivation to learn, because this isn't a crash. Will there be a crash? Yes. The NASDAQ drops 30% every decade. Every 10 years, it drops by at least 30%. Dot-com bubble was, I think, 78%. So you have to expect that and then expect to make money out of that. And we have these drawdowns of, say, 5% or something, at least once a year, maybe twice a year. Again, we can make money out of those. So let's look at some of our stocks that we'd expect to get hit quite hard today. SoFi, for example, because it's a finance company. They are therefore very, very rate sensitive. It's trading at 14.54 right now, which, of course, doesn't feel great. And it's also below the 50-day moving average line. Where's the 150? 50 is still far below, right? Yeah, it's still down here at 11. Now, is that unusual? Well, the support sits at 14 here, so 14.50 we could live with, but we know it's possible that we might drop some more here. PayPal will be another one that's going to be lumped in with all the finance companies here, dropping 1.5% here in pre-market, now trading at $75. That is significantly below the 150-day moving average line, and that's a bit of a whoops kind of a signal. We might want to get out of this. We might want to do something about that, and I'll see what we do with that about an hour into the market open. Palantir, who's had this glorious run up, is also down 1.8%. Did we somehow lose something in AI? Is the government going to spend less money? Is the Defense Department not going to like revolutionize everything? Are people dropping Palantir? Is something big happen? No. Sentiment. All of this market sentiment. So you can see it as an opportunity if you know what to do about it. I wouldn't be too worried about it trading at 110. It's pretty decent. If it stays at 110, that's definitely pretty decent. Support sits at 108. You can get that support level where you can go to TradeVision, which is here, tradevision.io, and get yourself a free trial to the software that we built to give you the best data and the best indicators known to man. This is how I find my trades every day. This is how I find my stocks. This is how I track my portfolio and so on. And it's an amazing platform that we give to you. I literally showed this to someone the other day. He was a banker friend of mine, and he said, why don't you sell this just to institutions and charge $1,000 a month for it per user? And I said, yeah, we could do that. Or we could just almost give it away, just reach a lot of people and actually help people. Or we could charge $1,000 to a bunch of bankers and make more money. What are we going to do? What are we going to do? Just give everybody access to it at a price that's super, super affordable, which is what we're doing. So check it out. Get yourself a free trial to TradeVision. Any other stocks we should be looking at here? Did we look at Tesla just? Tesla is up almost 1% here. It's bucking the trend, not hugely from yesterday's low. Well, 330 is where we're at, which is the, see that blue line I put in there yesterday? I said, this is the last sort of line of defense. That's that. But the support has now moved down to 300. So it's possible this could get a lot uglier for Tesla. And again, that's something you need to manage. You need to manage, right? So the exit up here at the 50-day moving average line, just generally my sort of rule of thumb, was a good one. Closing at the trend line, which is also one of our rules in the masterclass, is an even better one. You said you're using TradeVision and it's working very well for you. Brilliant. Did it work with Trade Republic yet? Good question, my friend. Last ones we added were Webull and Trading 212. We added Tasty Trade, Robinhood, Fidelity. I don't think we've done that one yet, but it's definitely on the list. It's definitely coming up. SMCI, yes, that is an interesting. That's up 10%. Why? Well, just thinking that maybe it isn't a completely dodgy setup afterward. And how's that going? Well, see that 50-day moving average line there? That sort of purple line there that I'm pointing to, this one here that I'm drawing in red, that's still there. That's still sloping down. So I know it's 10% up, but that isn't really a great deal when you've come from $123. Still down 70%. So to me, this doesn't qualify for my breakout rules, though it is definitely an improvement. Who's in on this, I feel for you. But it's below the 150, and I don't touch stuff below the 150, generally speaking. Some of you guys are putting out some of the stocks we've been talking about the last few days. KMDA. Someone put in the comments yesterday, your KMDA stock sucks. It's crashed. It's down like 3% after bouncing up, tremendous amount. So is that a problem at 785? For me, it isn't. I think it's just part of today's momentum. We shall see what earnings bring. Earnings are coming out today. Yes, after the market. I haven't seen it yet, but at the moment it still looks half decent. Now Archer, again, super volatile. And you have to understand that if you put your money into these like early growth companies that are building like new technology and so on, they are going to be very, very volatile. Actually up 0.4%, which is pretty impressive. And yesterday we had humongous volume here. It's just increasing and increasing and increasing, but the stock's still flat. What does that mean? It means that as we are going sideways, people are exiting. So I don't know who's exiting this, but I guess the people who bought over here somehow, I don't know why they're exiting this, but yeah, there is a pretty decent exit flow here from Archer. Not sure why, to be honest. David, does Trade Vision charge once the 7-day trial expires? Yes, unless you cancel it. Of course, you're very welcome to do, but yes, it's a monthly subscription. $1 a month for the month. Stephen, I sent the VIX email to you guys on Sunday. Please check your email and inbox. And if you haven't gotten that, then reply to any of my emails and we'll send it to you again. But I did send it out to everybody. It seems to have gotten stuck in some people's inboxes for some reason. I think sometimes if you include a link to like a Google Doc, maybe your spam filters get a little bit more active than usual. Microsoft, someone's asking, is that an exit? Let me have a look. I mean, honestly, you don't need to ask me those questions. You just learn the rules, because then you'd feel a lot more confident. You'd feel a lot safer, right? You wouldn't have to ask me. So we're breaking below the kind of longer term trend here. We're way below the 150. We're way below the 50-day moving average line. So it's not looking particularly glorious on the Microsoft front right now, $408. In fact, the whole Mag 7 are kind of limping sideways right now. Armada, seeing March 5th? Have a look. Armada earnings. When are they? It's always best to check the actual website of a company if you want to double check. Concentration. Tell us, does it? Reports. I thought, well, the data we have is that it's today. Let me check. Okay. Day chart. Yeah, it should be today. I think it should be today. I imagine after hours today. It's an Israeli stock, so it doesn't show up there quite yet. Somebody in Dubai. Zim. Oh yeah, that's an interesting one. That's one it's on my watch list. And literally it was on my watch list for today. Like, should we buy this? Should I buy this today? Yesterday was a pretty sweet setup. It was a very nice bounce there. Volume is just going higher and higher. So there's some real momentum there. It's above the moving average lines. Right now, it's flirting with the 50-day moving average line, which is that purple line there in the background. That's a purple line. So literally right at that level. That's probably just this morning's kind of market stuff. Is this a breakout? Those of you who watched the masterclass, would you say this is a breakout? Arguably, right? Not the cleanest line in the world. But yeah, you could, I think it'd be an argument that this possibly is. Yep. Volume is certainly spiking up a lot. So let's see what today brings. SMCI exploding, but still down about 75%. I wouldn't quite call it an exploding stock, but and Fox, I appreciate you putting the link to the masterclass in here. I'll pin it to the top of the chat as well. VIX inching higher today, absolutely, and that's going to make us some nice money today. I don't think it'll go quite to where I want it to go. I could do with a bit of a bigger move. It's still at 1680. I kind of want it to go to 20 because then we make a lot of money and then we can reverse our trade. At the moment, just sort of, it's picking up, but it's not, you know, where we've been in the last couple of months, last 2 months or so. Commandos tomorrow, is it? Okay, appreciate that, Ian. If you found that data somewhere. Nathan, you got into Zim at 18. Interesting. Okay, you were a little bit more gung-ho than me on that one. I'm still watching it. And it's good you have a stop loss on that. That is always the most important thing. So honestly, if there's only one rule that you take away from watching me here, even if only for a few minutes, is when you set up a trade or an investment, you got to set a stop loss. And if you want to figure out where to set them, watch the masterclass. Link is down below. felixprehn.org/ where is it? Here it is. Get free, so you can actually get free. Because honestly, all the stress around investing goes away once you automate stuff. Seriously, it just goes away because you know what to do and it's already set up, but it just happens automatically, and you sleep better, you make more money, you're more calm, you make better decisions. Your business will look better, you'll be more attractive, including your wife, and you know, that kind of thing. That's really what happens. Just by taking away the stress and the pressure of the idea. Which is what most of your questions are here in the chat, right? If you're honest with yourself, it's all about like, should I buy this? Should I sell this? What about this? What about that stock? All of that can be taken away by system, by rules, by a framework that understands the patterns of the market based on what professional successful traders have done for decades, literally decades. The people I learned this from, the bankers who taught me, they've been doing this probably 30, 40 years. They didn't invent it. They learned it from people who'd done it for 20, 30 years. And we've tweaked it slightly over the decades because the market has evolved, but it's still the same framework essentially, which means we know exactly when we get in on a stock before it really breaks out. And then we know exactly where we set our exit and we automate them so we don't need to think about it. Because on a day like today, where pre-market looks like this, it's emotional to hit the sell button on something that's losing you a bit of money. Or say you are up 50%, now you're up only 35%, and you're thinking, but it'd be nice if we could close at 50% up, wouldn't it? So you don't close at 35% up, which means you're going to go to 0, and then you're going to go to minus 50%, and you hold on to that, and then, you know, then you're going to be crying. And we don't want that. We want you happy. We want you smiling. We want you enjoying life. And how do you do that? You understand the patterns, you understand the rules, and you implement them and you set them up. How do you do that? Felix Prehn free and 15 life. Actually learning. Take notes, take screenshots, and then what I would really suggest you do is go and experiment. That's what's going to really make that sink in. And those notes, by the way, even if you never read them again, by writing them down, your whole nervous system is going to learn and absorb what I teach you in that masterclass way, 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 way more than if you just watch it. So write some notes. All right, let's have a look at some of your questions and comments here. I'm stressed and I only do paper trading. Well, then that's very good job you're doing paper trading, Alpha Charlie. There, very happy to hear that. David, you got your stops in place. You're going to do nothing for 24 hours. Brilliant. That's a great plan. Tesla, okay, my personal opinion, this is obviously not based on the stock chart. This is just where I think it's going. I think Tesla is going to do very little in Q1, and I think it might do very little in Q2. We're then going to get some robo-taxis on the road. That might also be a disappointing event because it might be like, yeah, they're like 10 on the road. Like, what's that going to do? But it's going to get us into this recurring revenue model. And then Wall Street analysts are going to slowly start to understand, because let's face it, they're not the brightest chaps in the world. I'm just kidding. I used to work with them. And they're going to understand that Tesla is going to get this recurring revenue stream, like a Netflix subscription that you're never going to cancel, like an Uber, right? It'll be like an Uber on speed. And it means that the margins are going to come up from the sort of 17% or whatever they are right now, horror show, and it's going to go to like Netflix margins. Once that's really out there, once people really understand that, in my humble opinion, this thing is going to. Next story will, of course, be robots, but that's a whole nother story for another year. So I'm very, very bullish on the second half of the year for Tesla. I think people are going to really understand what this company is going to do. But until then, who knows? What could change it tomorrow? Well, if Trump comes out and says, we've got federal, nationwide autonomous driving, so robo-taxi, self-driving rules that'll make it legal for people to take their hands off the steering wheel based on the technology that Tesla already has. You do that, you go to the moon. When is that going to happen? I don't know. I think he's quite busy. I think he's fairly busy. They're snooping around every government employee's accounts at present to see whether they have been on the, on that sort of, brown envelope job type thing, which is probably true for quite a lot of people, everybody. So they seem quite busy, and then he's trying to end the war in Ukraine. He set Hamas a deadline for Saturday. So there's quite a lot going on there. So they're pretty busy, right? And they're also working obviously on new tax rules and deregulation and a lot of stuff. So does it look good to reward Elon in week 3 or 4, whatever it is right now? Probably not. So it's probably going to be pushed back somewhat, but it'll come. It'll come. I'm pretty sure of it. That will be a very, very glorious day for Tesla stock. Do you ever buy dips? Yes, particularly on the index. That's usually what I do. So I think there's 2 places I buy dips. I sometimes have very strong views on companies that I think are going to really outperform, particularly if they're gotten hit very, very hard. And then I will start to buy those dips, but typically after the breakouts just started. I might do that with stocks or with leaps, but I will always buy, say, the dip on the NASDAQ or on the S&P, absolutely, because those opportunities don't come around that long, and in the long run, the stock market's going to keep going up. Why? Well, inflation for one, money printing for one, which is going to start again in the summer, by the way. Money printing is going to start again in the summer. So we have to have a little bit of a longer time horizon, but then with our trades, we kind of need to manage. We need to manage risk. We don't want to run into a scenario where we're losing a lot of the short term. Tesla seems to be recovering a little bit. Yeah, it looks a little bit positive there. The reflection looks scary. What reflection is that behind me? Because you can see there's a mirror here, you see. And you can see a little bit of the Kuala Lumpur skyline. Actually, we've got the Petronas Towers here on the other window. Lovely little corner place here. Jerome speaking today too, yes, but that won't be very interesting because he's going to say exactly what he said yesterday, just with a little bit less enthusiasm. I wouldn't bother watching that unless you suffer from insomnia or some sort of other. Do the dips have to be over the 150-day moving average for a stock? For me, yes. For the index, no. The reason for that's very simple. That if you zoom out on say the QQQ, right? So just QQQ, and you really zoom out here, like kind of as far as I can go back. And on this one, what's the 150? It's the pinkish line here. So whenever we were below that, say in 2022, and that was probably a pretty decent time to buy, or say in 2018, right? You could have bought the NASDAQ at 140. It's trading at 500 right now. So there are not that many of these opportunities. So when you do dip below the 150 or even the 200, I'm definitely a buyer of the NASDAQ. Absolutely. Stocks, very different. Why? Stocks can go to zero. The index cannot. Because some of those companies in the index go bankrupt, they just get replaced by something else. If Walmart goes bankrupt, seems unlikely, but it's possible, then they're just gone, right? So there's no like protection there. Oh, screen. Okay, sorry about that. Sorry about that, guys. There we go. You were just enjoying me, right? Although you saw it on the reflection in the mirror behind me. So yeah, in all seriousness, here this is the NASDAQ. Actually, UMH. This is the NASDAQ. And if you look at some of those dips below, say the white line here, say in 2020, right, or here in 2018, there were always buy opportunities. But that only applies to an index. It doesn't apply to companies because companies, as I said, go to zero. And there's been a lot of these dips. So if you bought all those dips, you'd be very, very wealthy. So yeah, I'm a dip buyer on the index, not so much on stocks. If Powell retires, he won't. He's a stubborn old mule. He's not going to retire. He's going to serve out this term. And in a way, that's a good thing. You don't really want to politicize the Fed. I think the Fed could be shrunk by about 90%. We don't need all those. They employ 4,000 economists, right? When were they ever right on economic predictions? So the more economists you have, the worse it gets. So they could get rid of all of those people. Save some money there for sure. But I think Fed presidents should be independent. They should serve out their term. Whether I like this one or not, and I don't, it doesn't really matter. I just think it's a question of market perception. The market won't like it. The market won't like the Fed becomes a political instrument. So I don't think so. I think he'll serve out. He's got 2 more years, right? And then Trump will have an opportunity to appoint the next one. And funnily enough, Trump appointed Jerome Powell, right? People don't realize that often. They've kind of forgotten it. Jerome Powell is a Republican. Yeah, Republican. He comes out of private equity world, so those guys are all Republicans. Trump can't fire him. It's not up to him. It's legally not possible to fire him. Ron Paul's going to order the Fed. Yeah, I read that too. That would be quite interesting. Is the trade vision up in the making? Yep, it is. It's looking pretty good, I must say. But yeah, it's still tweaking. But it's looking pretty good. Other questions, my friend? May 2026 is when Powell can be replaced. Thanks very much there for our little fact checker. Can you deport Powell maybe to the Bahamas or to Connecticut? Perhaps, yeah. Yes, you could try that. British style plug sockets. Yes, indeed. We are in Malaysia, so it's a bit of a British hangover over here. Can you add relative volume to trade vision? That's a good. That's quite nice to see at the beginning of the day, isn't it? I look at that myself, I must say. I will add that to the feature list, my friend. That's a great suggestion. CVS is breaking out 12%. There's always something that goes up. There's always somewhere to make money. You're right, CVS is going up 12%. Wow, that's quite the move. Earnings must have been stellar. 25% surprise beat on earnings. And is that a breakout? Yaha, that's a breakout and a half. And it's above, and this is quite important, and that's what I would watch out for today. Are all of these guys who bought here, that sort of $58 to $60 range, those are bag holders, right? The kind that we're trying to make extinct. We're trying to make bag holding a punishable offense by teaching you actual rules on how not to bag hold. These guys here are likely to sell on a breakout like that. Why? They've been keeping a secret from their wife for the last 9 months. And they've been saying, yes, portfolio is just fine. Yes, why do you keep mentioning it? And while they were underwater on CBS, and they were seriously underwater, right? They were down 30% or something like that. And when you're down 30%, it doesn't feel good. So when you go back to a flat 0 or maybe even 5% up, you'll tend to. The question is, can CVS hold that breakout today? That's what I would watch. Did you say Connecticut? I did. That's where bankers and private equity guys get put to pasture. Connecticut. That's what at least my answer. You didn't get your mixed chart on Saturday. I sent it to everybody on Sunday, my friend. If you didn't get it, would you reply to any of my emails and we'll send it to you again? I think for some of you, your spam filters must have eaten. Does your voice sound like Stewie Griffin? Stewie Griffin is, but you could ask him. Welcome to Malaysia. Thank you very much. It's a beautiful place. ACHR volume is up. Got to upstart. Look, so CVS looks like a breakout this morning, but I'll be a little bit cautious on that one. Upstart, UPST, 30% up. Oh, wow, 9 minutes into the market and hitting the highs here. Can you see that? It's almost as if charts matter, right? It's almost as if charts were telling you the entire story, all the knowledge and all the wisdom and all the mindsets, bends of every investor and trader out there. Exactly what. So it'd be interesting to see whether we can break through these $85 highs here. That's your resistance. And let's see if they can do that. CVS is up. Earnings looked that they were pretty good. Let's have a look at some of our favorites here. Let's have a look at Tesla. To my Malaysian viewers, you seem to have fireworks every night here. Is that normal? Is that still a Chinese New Year hangover or something? Or what's going on here? There seems to be fireworks every single night. Very surprising. Tesla is up 2% at $400. What? No, at $335. Sorry about that. Caused a heart attack there. It wasn't my intention. But 2% up is decent. Pretty decent. Let's have a look at NVIDIA, which is the other one that really is important right now. Down 1.1%. That's not brilliant. Still, it bounced off the 150-day moving average line, so it's not giving up quite yet. Where's the support? Anybody know? Its support's moved to 120. Ouch. So as long as it's above that purple line here, 150-day moving average line, we're good. Below that, oops. Anything else we should look at? Let's have a look at SoFi. Financial stocks are particularly rate sensitive, so you'd expect them to dip today because inflation came in a little higher. But again, not looking too bad. We've bounced off a little bit off the pre-market lows at 1460. Palantir was also down a little bit but it's green, 0.4%. So it's not looking quite as horrific as we had anticipated. PayPal, and that's what I said. Part of the thing that happens, Hudson, for your options traders out there, or maybe aspiring options traders out there, before a big announcement like interest rates today, a lot of Wall Street will hedge their positions. And that in itself, once they unwind those hedges, once they close them, which is what they would have done this morning, that actually tends to drive the market up. So quite useful here. But PayPal is still looking pretty bad. It looks pretty bad, yeah. And it's up a little bit, but it's still below yesterday's trading range. So definitely not a good one here. We are one. Okay, my friend, you are site challenged, I believe, which must be an interesting way to invest and trade. I can't quite imagine how you overcome that challenge. Some of you guys are thinking, oh my God, my stock's down 2%. This gentleman, I believe it is a gentleman, can't actually see the screen. Quite extraordinary. Yet is able to manage his investment. So you have it very easy, very, very easy. So yeah, PayPal is trading at 75.81 right now, which is down at 0.5 percentage point, but it's significantly below the 150-day moving average line, which sits at about $78 right. That's definitely a positive setup here. Sign from PayPal. Charles Schwab is indeed following Robinhood to offer 24-hour trading. Be very careful with that, because the only people making money out of that are Schwab. Because the bid-ask spread, so what you're paying for, is significantly more than if you do it during liquid market hours. I would be very cautious about 24/7 trading business. It is actually a firm Alpha's putting out there, which I opened a position into because Winston insisted. Down 2 percentage points, and it's a financial stock. It's not really surprising. It sits at exactly 76.41 right now. 76.43, which isn't significantly below where our breakout was. So it's a little bit above still. I'm not particularly concerned about it at this point. We're still above the sort of $73 support here, so it still looks pretty good. Braille keyboard and display. But the stock's very volatile. The stop loss hurt because the stock might go down and up very fast. And that's a little bit where experience comes in, or getting someone to guide you. You need to take into account the volatility when you set stop losses. Like if you open a trade on, I don't know, stock that moves 10% in a day and your stop loss is 4% below where you entered, you're probably out of that trade tomorrow, right? So if your risk level is 4% and you're buying a stock that moves 10%, well, you shouldn't buy that stock. That's the answer. You then need to adjust your stop loss to allow for a bigger potential downside. That's just the reality of being in riskier stocks. So you need to kind of tweak those rules. It isn't entirely one size fits all. Big Bear AI long term. I don't know about the long term on something like that. For me, that would be more of a short term play. It's certainly had a very nice run up. I keeps breaking. Do the same for anybody else. Please. You spend 6 months in KL. Yeah, it's a lovely place. Really lovely place. Mac says buy the dip, buy the effing dip even. And I think that's been the sentiment. And it's served retail investors very well. So I wouldn't necessarily argue with it. I would just be a little bit selective on what I'm buying the dip on. But Tesla is right now 2.8% up. Very nice. Palantir is up 1.4%. Nvidia and Apple and Google, Microsoft are all down, but less than 1% now. So the market is recovering from inflation shock, which we were expecting inflation to come in a little higher. So I think probably a bit of an overreaction to the market opening here. But look, actually, what are our tech stocks doing? They are PayPal's, our SoFi's. PayPal's done 0.5%. That's still not looking pretty. It's a lower high, a lower low at the moment. So I think PayPal is definitely something we need to manage. Puts moving up. Not sure. I do nothing. That's usually quite a good concept. Isn't this inflation from tariffs? No. This is the old inflation data. This isn't going to be affected by tariffs in any way, shape, or form. I actually haven't looked what's under the hood of these ones yet, whether that's a bit of energy or whatever it is. Tariffs, by the way, they cause one-time inflation. So potentially a one-time inflation event. Then 12 months later, it's gone, because that's how we measure inflation. So I don't think it's a big deal, to be honest with you. I don't think tariffs are a big deal. The market doesn't like the uncertainty, because Trump hasn't been really clear on what he's going to do. And I think that's his negotiation style. He's using these tariffs as a negotiation ploy. And therefore, it's going to cause some ups and downs in the market. Our goal, of course, is to make money. Nuclear, I think nuclear will broadly do quite well. I think the data center energy demand is so tremendous that we're going to need all forms of energy. I don't have any nuclear plays open at present, but I think Oklo is definitely an interesting one to follow. How far down do you think is Tesla going? I think it's a sentiment thing, really. It's kind of it's weird, right? Because we're so close to autonomous driving now and robo-taxis, which I think is the real catalyst for Tesla. And yet people are like, yeah, I haven't got the patience for this. So from a chart point of view, 300 is a definite possibility. Doesn't mean it's necessarily going to happen, but at the moment, there is that risk. If we drop below the 330 today, then I think 300 is definitely on the cards. Do you recommend buying Dell? I never recommend buying anything, my friend. I value what I see on the charts, and you have to come to your own conclusion. Why does Trade Vision not ID CVS as a breakout? We run the breakouts at lunchtime and at the end of the day. We don't do it sort of live throughout the day because it'll just give you too many false flags. So sometimes things go up 10% and half an hour later they're down back to zero. So you would just get all these false flags all the time. So we are not day traders. So we basically look at this twice. And you get emails with those. Wow. We've always been days away from self-driving. Yeah, but I think now you have Elon's best new friend in the White House. I think that's the difference. So in my opinion, it's going to happen very, very quickly. What do you think about Grab while I'm in Malaysia? Brilliant. I use it all the time. So Grab is sort of the Uber of Southeast Asia. But I don't know whether that means, this is a good stock to invest in. I really can't tell you. I can tell you what the chart says. Up 0.8% must have been all the cars I was driving around in today. So at the moment, yeah, it's consolidating, I'd say. But the 50-day moving average is coming down, which is for me not a point where I would buy. So Long consolidations are generally a good thing. It just means the next move is going to be that much bigger. At the moment, I'd see this as a do nothing. Why don't you like day trading? It's a bit like getting a job, Charlie. I don't like jobs. Day trading is stressful. You have to like work during the day and get in and out and be really active. I like to set up a position, set up the exit, so automate it, and then I like to go out and enjoy my life. I don't have to actively. I don't really like it. It reminds me too much of work, and I never really enjoyed work. So I wouldn't recommend becoming a day trader. I think it's some sort of weird, we've all been programmed to think we need to be really busy, we need to work really hard. Hard work doesn't actually make you healthy. Hard work makes you tired and grumpy and unhealthy. It's being smart with your time. That's really what it's all about. And all the most successful people I know, or the billionaires I know, they don't work hard. They just don't. Surprising. They tend to go to the office if they have one at about 11 o'clock. And I think that's a good way to live. So don't become that mouse in the hamster wheel and think you need to. It's a silly thing to do. Give me Winston's contact. Oh, he's definitely absolutely. When the breakout happens, when do you enter a trade, says Sergio? It depends. We have this amazing breakout scanner inside Trade Vision, which I'd recommend you just try it out. I mean, really, just try it. It's completely risk-free. There's a link down below here, tradevision.io. And it gives us a bunch of things that sort of, well, not just sort of, that definitely tick the list for what I consider a breakout. But at this point, we still need to look at this manually and say, is this a good one? Is this a bad one? And honestly, for that, it's a little bit hard to codify. It's a little bit more experience. And I think the only way really you learn this, and honestly, the only really successful traders that I've ever come across, they've learned this from human beings. This is one, for example, that we entered a while ago, MITE, which is if you're in Europe, Might Teresa is sort of an online shopping thing like Net-a-Porter type thing. And that was a breakout. That was the breakout. Here was the breakout. So we got in here, and then we got another one here, and we're looking pretty good, right? So we got in at sort of $8 something. Now it's at about $12. So you need a little bit of an understanding for how that works, how that pattern works. Is this too high? Was the gap too big? Did we jump up too much? How was the volume and that kind of thing? I think that just comes from experience. As I say, I think you can learn experience in like weeks or months rather than in decades. You can go out and you can play with it, and after a few decades, you'll do it all right. Or you can just talk to somebody who's done it for decades. And so that's my approach. It's just like, let's just find the smartest person who's done this the longest, who's willing to teach me, and that's what I've done. That's why I have mentors. To say, every single investor and trader that I know, every single banker, they've always had a mentor. And it was usually their boss, right? But watch the masterclass. You can see a little bit more about also if you want to learn from us. We're super happy to do that. But just get yourself that free knowledge under your belt first. Coca-Cola. Yeah, I was looking at that yesterday. I was almost tempted to buy it, to be honest, because it's one of those tremendous brands. Company that isn't really going to go anywhere. I was concerned about the massive gap up here we saw yesterday. Today kind of looks strong. So I'm liking the reaction today, which makes me want to buy it more than just that massive gap up. So sometimes you get these massive gaps up and then you come back down. There is going to be resistance up here in the sort of $70 area. That's only another 8% up. So is it worth it for you for 8%? There's a couple of things you need to take into account that are not going to fall into place naturally. Logan says Felix is our boss. I thought it was Winston. Google is asking about Hargraves, Lansdowne, and Trade Vision. Yeah, we're working on that. I think that's the next UK broker we're adding, because it's quite a popular one. So yeah, we're definitely working on that one. That's going to come up shortly. Let's have a quick look then at the heat map here. It's Tesla is up, Palantir is up, Apple is now flat, which is pretty good, and all the big tech stocks were down a lot more than they are right now, which doesn't make you feel all that wonderful and fuzzy inside, but it's definitely a lot better than it was at the opening. Inflation data came in hotter than expected, which means rate cuts are pushed back further. The expectation is now December. Now, what do I like about that? I think that's a pretty bearish scenario, that there won't be a single rate cut before December. What does that mean? Well, the market's already pretty bearish. Sentiment is pretty miserable. And that therefore means it's much more likely to improve than to go down. It's seasonally, now until March, is probably one of the worst periods of the year. So a little bit of patience, opportunity to set up some amazing set entries, I think, here. And really all I'd say to you is just automate it, learn it, go watch the masterclass at felixprehn.org/get-free down below, and you'll learn how I enter stocks and how I exit stocks and exactly those points. And I think it's going to make you feel a lot calmer, a lot more confident, and a lot safer, which is honestly what life's all about. You want to feel happy. I never want to do something that kind of causes stress or sort of distracts me or stuff I need to think about during the day. So the best way to do that is your money to work. Rules. Let the rules do their thing. I thank you for tuning in. I love you for watching and for your desire to learn. I love that we have a smart room here every day of about 3,000 people live, which is super, super cool. So if you get some value out of these videos, hey, share it with people. Put it on your X account or your Facebook or wherever you post stuff. And more people will find us and will help more and more people get to financial freedom